appreciate you taking time. I know you're all busy. Year-end stuff's coming up. You're all trying to get final budgets and stuff ready. This training that we're going to do today is going to focus on really the governmental fund methodology of accounting. And this is kind of prompted based on a lot of questions we received from schools, observations we've made, and everything from budgets to quarterly financials to 387, 388A reports. And so that's really what kind of prompted this training. It was also prompted out of discussions I've had with finance leaders in districts as well, other CFOs, controllers and such across districts. And so this is really kind of our first stab at this training. So please ask questions. When we get to the end of it, I would like to not only will we take questions, and we'll take questions throughout, but also if you guys have other areas that you would like to explore further as far as training, and not only training, but collaboration amongst yourselves as well. So feel free to throw that out at the end. But with that being said, I'm going to start the slideshow and we will get rolling.
We have $4 million raised.
Hey, Mike, can you give me a thumbs up when we look good?
Yep.
Okay. Okay, very good. So as I stated, this training is basically on accounting for governmental funds, okay? And so what we're gonna cover today, get my slideshow going here. The purpose of today is really the what, why, and how. What is fund accounting? Why do we use it? And how should we use it? We're also going to get into, this is based on a lot of the requests and questions, comments and stuff we've had from schools, like coding questions and using the chart of accounts. How do we transfer, or when should we transfer between funds? That comes up a lot during 388 report, but also budgeting, right? How do fund transfers actually work? Restrictions around revenue and which funds they should go in, assigning revenues to the proper funds, and just basic implementation of fund accounting. The vast majority of our schools, as we've discovered over the last year, is that the majority of you are doing your daily bookkeeping more on a government-wide basis or like a private business type basis. So this training is really around what is fund accounting, why are we supposed to use it, and the compliance implications of it. So the regulatory side that says you have to use it. We're going to get into all of that as well. And just a reminder, this is recorded and will be made available. And so you guys can always reference back to it along with all the trainings. Okay, so let's jump in. So we're going to talk about various things: the structure, compliance, the application, and really the overall financial health, why these pieces fit together. So when we're talking about the structure, the what, it's understanding the fund accounting structure to track sources and uses of public resources. That's what this all boils down to. Pretty much all of your resources are restricted in some manner because they are public, or possibly private grants, etc. And so this really we're going to talk about the structure, why it was developed, and why it's considered a best practice. Compliance, so legal compliance with budgeting and reporting to properly track these resources. We're going to get into that. I'm not going to go super into detail on all the NRSs and NACs. You guys can look that up, but I am referencing them so you can reference them later in discussions with school leaders, boards, etc. The application, so the how part. Implementing the chart of accounts on a fund basis, including daily bookkeeping and the proper recording and transferring of resources between funds. And then referencing GASB, right? A lot of what we do is rooted in GASB from the Governmental Accounting Standards Board. And it requires governmental funds and government-wide financials to really create a complete picture of financial status of local governments. And we're all considered local governments. As public charter schools governed by your own boards, you're considered local governments for the purpose of these regulations. So that's really going to set up kind of the training, the things we are going to cover. So real quick, what is a fund? NDE and GASB both pretty much outline it as the same thing. GASB really has the ultimate definition. And really what it is it's a separate entity with a self-balancing set of accounts. And so you can almost think of these funds as separate educational and operational entities within your overall school operation. And each of those entities has their own complete set of books. A lot of the count codes all repeat, et cetera, other than the fund code. And those separate entities have to have their own set of financials, which obviously your auditor does at the end. Now, they'll combine a lot of the funds into major funds, but essentially that's what they're looking at. And that's what your board has to look at. What are the resources coming in and going out of each specific fund that's been authorized by your board? And then these are the fund categories.
We've got a raised hand from Nachum.
Go ahead, Naga.
And Nachum, you're muted.
Sorry, I didn't mean to raise my hand. I don't know how that happened.
Okay, no problem. Okay, so GASB defines these funds, breaks them up into 3 different categories, and you'll kind of see these categories in the NDE chart of accounts. Governmental funds, that's a vast majority of your funds. School districts get into using some of these other funds a little more, especially proprietary, depending on the district. Charters, it doesn't really apply, but there are cases where it is. So governmental funds, these are going to contain the vast majority of your funds, from general fund to all your weighted funds, special funds, federal funds, et cetera. That's really all contained within the governmental funds. Proprietary funds, there are a few of you I noted that are using these. These are more of your enterprise funds that you have a specific activity operating in your school that operates like a private business that's profit oriented, that's there to generate a profit. Maybe a school store, if it's a significant thing where you're selling school uniforms and things like that, and it's generating a significant amount of money and profit that your board wants to recognize and either leave that profit within that business or sometimes transfer that profit over. But generally, like school districts, there's some school districts who, have construction classes that build houses and sell them. And they will keep those expenses and revenues and profits all contained within that enterprise fund. And then fiduciary funds, these are really funds where you're acting as the bank. So if you have clubs, student clubs, where they control their own money, they fundraise, you don't contribute money to them necessarily. You're not funding it with state funds. You're just acting as the bank and as the fiduciary. That's really what those funds are for. They're the 900 codes. And so here are some examples of the funds. And again, we get into things like proprietary funds. There are school districts who operate like full production kitchens that are designed underneath some sort of like culinary program that may generate a profit. So they might have, a food production proprietary fund. I mentioned construction, school stores. There's also some districts who are self-insured for things like workers' comp. I believe there's some that are self-insured for health insurance now to a certain capacity. And so those might be contained in some sort of risk management fund that's separated. That's considered a proprietary fund. And then, of course, fiduciary funds are things like student activities, like I mentioned, or things like pensions, if you had some sort of trust set up for pensions, not to be confused with what you're paying into for PERS, et cetera. But all your other funds, even capital projects and debt service funds, are considered governmental funds. Okay, government-wide financials. And this is really what a lot of you are operating your books under on a normal basis, et cetera. This is really a GASB compliance thing and a best practice thing. It came about in 1999. This is where your long-term financials are generated. This generates a view. Fund financials are a short-term basis. You really don't include balance sheet stuff. GASB paired government-wide financials in 1999 and said, this is a practice that should be done at the audit to give stakeholders like boards, states, et cetera, city, counties, whatever, a more long-term financial health gauge of those entities, right? So this is going to include your statement of net position, statement activities. It'll include all your liabilities, your amortizations, all your debts and assets, et cetera, right? That's all contained within those government-wide financials in compliance with GASB. However, that requirement is really done. It's a requirement of the year-end audit in order to take your books throughout the year, convert them over, run two sets of financials, one on your fund basis that you've seen in your audit, one on the government-wide. And that's really when your boards and school leaders and the public get a picture of your overall financial health, not necessarily in your monthly financials or quarterly financials that you present in a board meeting to your boards and to the public. Okay, so why are we supposed to keep our books on a fund financial basis, and why are we supposed to implement this reporting on budgets, quarterly reports, annual reports, which is all done on a fund basis? So GASB intentionally retained the fund accounting for transparency and compliance. So that's in those requirements. It's also part of the National Center for Education Statistics. So in those guidelines, which they haven't really updated since 2014, it talks about organizing, and this is on the national level as a best practice, organizing accounting structures in states. So states should organize their accounting structures utilizing funds in order to best track all the various dollars that come in from the public, whether it's state, local, federal, et cetera. It's part of the NCES guidelines. As a best practice, fund accounting, and please, I don't want to let anybody think that I'm some sort of accounting historian by any means, but it does appear that it's been in practice for a long time and been being refined over the last century as local governments have become more sophisticated and have various revenue streams and tax dollars. It's all rooted in tracking the various tax dollars, whether it's coming from the local level, the state level, federal level, et cetera. And so it's been being refined for decades, for like 100 years. It is also considered a best practice by the Government Finance Officers Association, the GFOA. Some of you may be familiar with that. There's a lot of discussion in that national organization about best practices around fund accounting. And lastly, Nevada law. Through NRS and NACS, there's a bunch of different ones I'm going to outline here that all reference back to either the authority of the department, which is NDE, for authorizing the chart of accounts, and requirements for all local school districts and charter schools to use those chart of accounts, reporting requirements, etc. So this really gets into the recording regulatory compliance, and I'm going to stop here.
Yeah, we had a
Go ahead,
question
Mike.
in chat.
Okay.
Robert Handwicker asked, does fund statements include all of the pension liabilities and deferrals?
Does not. Those would be in the government-wide financials. Your fund financials simply track the inflow and outflow of resources. And that's the best way I can describe it. It's everything that's coming in, whether that's debt, grants, public, state, local dollars, whatever coming in, and then everything you're writing checks going out, including principal and interest, et cetera. But it does not incorporate those long-term things like amortizations, your net pension liabilities, et cetera. So here, I'm not going to get into all of these various NRSs and stuff. Like I said, it's rooted in GASB. A lot of the NRSs and NACs talk about complying with GASB as well as the authority of the department to authorize a chart of accounts that then gets approved by the State Board of Education. It's all rooted in NRS and requires local governments, and in our case specifically, public schools, to utilize this level of accounting at the budgeting. So in the full budget cycle, starting with budgeting, accounting for the resources throughout the years, amending your budgets, and then ultimately reporting. When you close out your books, you have the audit, you have the 387, 388A report. All of those things are structured based on the NDE chart of accounts and the fund methodology. And this is really all the compliance regulatory reasons of why it is we do what we do. It's not just because somebody decided, hey, this sounds fun, let's run 2 sets of financials. I don't think that's fun for anybody, but it is rooted in compliance. And these are for your reference. You can reference back, you can show them to your boards, why it's important that you do these things, et cetera. We have had questions from some of you who are currently operating your books on a government-wide basis, maybe because that's how it was originally set up years ago and you came into that scenario or whatever, but asking us, hey, should we consider converting our daily operating books over to a fund basis, et cetera? And if so, how do I talk to my school leadership about it? How do I present it to my board, et cetera? This really gives you all those kinds of reasons why right here on this slide. So you can reference back to this and look at that, et cetera. So I'm going to stop here for a second before I get into budget authority and see if there are any other questions before we kind of go into the application section. Michelle, I see your hand up.
I just have a quick clarification. In a prior training you had, I think it was with the budget template, about there was a statement that fund accounting must be used by schools, right? The ins and outs. And then there's been a lot of talk about the government wide, and I feel like all the rules are saying, and you're saying that fund accounting is the way to go, but it doesn't seem like, it seems like you go either or. I'm just a little bit confused. Like, do you need to do fund accounting, or is it okay to do government-wide accounting?
So it's a great question, and it's one of the questions we've got. What your boards need to see, and this is a compliance thing, and I'm going to get into this starting right now, but your boards have to authorize your resources, so the inflows and the outflows, by NRS, they're required to do that on a fund basis. So when you present a budget to your board, it has to be on a fund basis, so they can see that when they approve a budget, that there's X amount of expenditures in your general fund, X amount in your special ed, ELL, at-risk, federal funds, et cetera. And that is a binding authorization. It's a legal binding authorization for your school leaders to spend within those board-approved appropriations. So that is really, and this slide specifically talks about the budget authority, and that only your board can, number one, authorize. They have the fiduciary authority to authorize your school to expend money, and they have to authorize it at the fund level. And then you have to stay within those authorizations. Only the board can change the expenditures within a fund. Only they can say, yes, you're authorized to spend more. Obviously, if you don't go over, then you're fine. Or only your board can authorize transfers. If you want to move money between funds like your general fund over to special education, ELL, et cetera, only the board can authorize that. And so it's a huge compliance issue that we are seeing with schools. And I'm going to show some examples here in a second. When it appears in their budgets, their boards are not getting an accurate picture of where they're really spending their resources, where they're expending that money. And it puts the school leaders in a position of non-compliance. So if you're not budgeting properly in special education and you're way low, for example, that you're really going to spend $500,000, but you are only showing your board 200,000. Well, technically, when your school leader who's responsible for the budget, for administering the budget, goes over 200,000, they're violating NRS and NAC. And so it's really all rooted in compliance and budget authority. School leaders have the ability themselves, and if we have any school leaders on this call, I don't know if we do, but a school leader can move money between functions within any program. They can do that. They have the authority to do that per NAC. And unless your board has set up financial policies that says, no, you can't move even between functions. However, according to NAC, and these are really minimum authorization requirements. If your board puts stricter rules in, they can obviously do that. But even at the program level, so if your school leader wants to move money from co-curricular back to general programs, so co-curricular is 900, general programs is 100, and both are contained in the general fund, your school leader can do that, but they have to notify the board. And then, of course, if anything's going to move between funds, only your board can do that, and they have to do that in an amended budget that authorizes that. So it's very important that when we say, even if you're currently keeping your books on like a government-wide basis, what you're showing your boards has to be, whether it's monthly budget to actuals, your budget, or your year-end reports, you're showing them the 387, 388 report, et cetera. They are supposed to see that on a fund basis. Minimum account code structure, you guys have seen this before. I'm not really getting into the structure of the NDE chart of accounts in this. This isn't really a chart of accounts training, but I did want to show this kind of your minimum code structure that should be in your books is really this. And this is prescribed by NDE. So this obviously identifies the fiscal fund. The project grant is the source. So that's how you track the actual source of the revenue. And so you can match up the sources and the uses. And then program function object. This helps you track everything from what program it's for, what it is, and its intended use. Okay, thanks, Mike. Okay. Practical implications. So we talked a little bit about this authorization. It's your boards that have that legal authorization. These are the practical implications of why you should. And so, Michelle, this kind of talks about what you hinted on in your question. School leaders are legally bound to those board approved resource allocations. So those budgets, you're legally bound to that. Internal controls. The NDE chart of accounts is there for you to put internal controls on the budgeted resource and the allocation of those resources by your school leaders. It's there for you to track and measure against that board approved budget. And then lastly, transparency. It's really designed for transparency, not only with boards, but the public, right? What resources came in? How are they restricted? What are their purpose? And how did we ultimately use them? And that goes whether they're local, state, federal dollars, private dollars, et cetera. All of that is to have complete transparency as required by state law, state and federal law, really. Okay, so before we go on to any kind of common observations we have, this is all rooted in some of the questions you guys have asked and stuff. Is there any questions on what we've talked about so far with just compliance and kind of the why we're supposed to do it, et cetera? Okay, so common mistakes and observations. This isn't related to any one report. It's not just budgets. It is rooted also in 387, 388A observations, quarterly financials, et cetera. So things that the obvious one, bookkeeping, right? Like I said, the majority of schools, and kind of understandably so. I do want to make that statement is the financial performance framework of the SPCSA has long been set up pretty much solely on the government-wide basis. I don't know the history of all of it. I'll be totally honest with you. But so it is understandable why a lot of schools, the majority of schools, have set their books up that way, more than likely in compliance with the state performance framework. That framework is changing to more align with legal, what's required with NRS and NAC, what's required in the budget reports, the year-end reports, et cetera. And so what I'm looking at, what we're going to go over as far as common observations and stuff, we do recognize a lot of this is rooted in what SPCSA has required in the past. So I do want to acknowledge that and make sure that you guys understand that we are aware of that. But obviously the bookkeeping thing, government-wide, which is full accrual methodology, fund accounting is really modified accrual, right? Short-term measurement of resources, et cetera. A lot of this I've already talked about, not presenting budgets and financial reports to the board at the fund level as required by NRS and NAC. Mistakes in converting your government-wide books to a fund basis, making sure the resources are going to the proper funds, and the application of those resources, coding those properly, understanding where they should go, and then reporting that to your board. Misidentification and classification of expenditures, what really should go where, and how we should make sure that's being tracked, how to work with your school leaders to make sure you are getting all the information you need to code those expenditures correctly, et cetera. This next one's kind of a big one, not amending budgets in a timely manner. So I talked about that compliance piece, that your board has that authority. When you know resources are going to change, if enrollment's gone way up and you're going to need to spend more, if you've enrolled a bunch new IEPs and you know that you're ultimately have to service those IEPs and your school leader knows you're going to have to spend more because you have to hire an additional staff member to service those IEPs. Maybe you enrolled a student with severe needs under their IEPs that requires a one-on-one, right? You can't really budget for those types of things. Knowing that, this is the reason that budget augmentations are there, so you can take those in order for you not to be spending outside of your budget authority and putting yourself in a non-compliant situation. That's what amended budgets are for. And so you really should utilize those. I can tell you, I've had years where we had 3 different amendments throughout the year based on things like enrolling students with severe needs in the middle of a year, getting a grant awarded partway through the year and being able to start a capital project. I mean, there's a whole host of reasons that could happen, but you should be presenting when something big happens, an amended budget for your board to approve that reallocates and adjusts at the fund level those sources and uses or those inflows and outflows of those resources in order for your school leaders to be in compliance, and then for you to then give updated financials based on those new budgets. So given the new amended budget, here's where we're at X point in the year, for example.
Dusty, we have a question in chat from Loretta. How often do you amend your budget?
So again, this is a little different for charter schools. So school districts are mandated by NRS that they have to do an amendment, at least one amendment in December. And that's rooted in the October 1 count. And once their official counts have come in, they have to do an amended budget in December. There really isn't a requirement for charter schools like that yet, but you can do it anytime. I've done them in September, very common in January, December, January, after your audited financials have been complete and you have a reconciled ending fund balance from the prior year. Sometimes you might have additional resources that you weren't budgeting for that then you now want to spend. A school leader wants to use some of those excess reserves or something like that. So generally at least one in the middle of the year, once you have a clear picture of your enrollment, all your grants, things like that. And then of course, you can consolidate all those changes. It also is okay to do a year-end true-up budget in that May timeframe, whatever, June, after the dust is settled, but you know that maybe you want to, maybe things have happened in the spring where you haven't quite reached the expenditure limit yet in a program, but you need to true it up or in a fund, and you may go over by the end of the year. et cetera. Maybe something unforeseen's happened and you need to use some contingency funds. You had an HVAC unit go down or something like that. There's a whole host of reasons. But there are schools, ours was one of them at Oasis Academy, where we did a year-end true-up budget in May, June every year. And that was our final budget, trued it up. We ran the rest of our payroll out, et cetera. There were years where we decided to offer some sort of incentive at the end of the year, et cetera, right? Again, lots of different reasons. But that's really triggered on large events or a culmination of a bunch of small events that might trigger that amendment, but you can do it. Your board has that authority anytime during the year. But you definitely should do it before the spending authority has been reached and somebody becomes non-compliant, right? Okay.
And Dusty, we have another question in chat from Robert. If we provide the board our budget only via the budget template, does that meet the requirements of the NRS and NAC for fund approval?
Yes, and what's common, yes, it does. What's common, you'll see if you pull up a school district budget, is they use that Department of Taxation form. They print off all the tabs in the PDFs, and that's all part of the budget package that the board sees. Now, you can go further and do summary sheets, right, that summarize it. You'll see fancy presentations by like Washoe County School District or Clark County School District with pie charts and all those sorts of things. But in that package that the board approves are all the sheets of the Department of Taxation workbook that they actually approve, and the Schedule 1 in that's really your summary sheet by fund is the summary level of all your funds that your board approves. So yes, absolutely. Okay, a couple more bullet points here. Misunderstanding of how transfers work between funds, like what's allowed, what isn't allowed. Another real common one we're seeing is misconceptions around what's a grant and what's an appropriation. And I'm going to show you an example here in a second where I see a lot in these budgets and also sometimes in the year-end reporting where schools are matching their expenditures to revenue in special funds like ELL at-risk special education, treating them as if they're grants that you can't spend outside the grant application restrictions. And that's a very common misconception we're seeing. I'm going to show you that example right now. But those are not grants. They're appropriations and meant to fund a specific purpose like ELL, at-risk, GATE, special education, knowing that we're drastically underfunded, and it's going to cost you more than that to service those IEPs or service those students on in ELL programs, et cetera. And so very commonly do we see that misconception, but understanding the difference between a grant with the grant restrictions and funding appropriations from the legislature is a very common one. Another one I'm seeing, although I'm seeing it less, which I apologize, using funds not authorized by boards. We're seeing stuff listed on the budget templates that I'm fairly certain, some are obviously not necessarily board approved. And so those funds, your board is the only one that has the authority to open up a fiscal fund. If the board says, yes, we want to track federal resources in Fund 280 because we're getting substantial federal resources, then your board authorizes that. Now you can take it and say, I recommend that we open this fund because we have some substantial amount of federal funds or a substantial amount of other state grants or stuff that's required of you. Maybe you never got GATE funding and you're going to open a GATE program. Well, when you receive GATE funding, just like ELL or at risk, you are required by the state to track those funds in a separate fiscal fund. So your board has to acknowledge that in a meeting and say, okay, we're opening a GATE program. And yes, we authorize the opening of GATE fund to whatever it is, 207, I believe. Same with special education, state special education. You have to keep those in a separate fund, okay? But others you don't have to. If you only get a little bit of federal dollars, you don't necessarily have to keep those. I can tell you at Oasis Academy, we never had a separate 280 federal fund. We had minimal dollars, just like Part B dollars. We weren't a Title I school, et cetera. And we just had a little bit of Title II and Part B. We left those in our general fund. And we actually approved that with our auditor. We sought guidance from our accountant and our auditor, and both said, yeah, it's not a substantial source of funds. Now, again, I would recommend if you're thinking of that, you check with your own auditor. I don't want to say that as a blanket statement, but those are just some things that we had done. We also didn't operate a state grant fund, 240. Those generally went to another fund or in our general fund. And last thing, recording of debt and capital expenditures on a fund basis. Obviously, it's different between governmental wide on a fund basis. Again, you record the checks you write. So when you make a loan payment, it's principal and interest. That's treated as an expenditure. When you buy a capital expenditure, you buy a bus or you buy technology that's over $5,000 that you will put on a depreciation schedule that on a government-wide is a balance sheet item, not necessarily an expense in the first year other than depreciation. It is an expenditure in fund accounting. So if you write a check for a new building, you bring in a bond for 16 million and you buy a building for 16 million, that's 16 million worth of resources coming in and 16 million worth of resources going out that you capture in your governmental fund accounting. It's really pretty simple at its core. It's literally just tracking what comes in and what checks you go out, write out, whether it's payroll, debt, capital, etc. So pretty simple. I thought I saw a hand up. Michelle.
And we also have a few questions in chat after you've answered. Great. Michelle.
Go ahead, Michelle.
I just want to clarify one or two things. So on EL Gates bed, different, I guess you're calling appropriations. Grants, you obviously it has to balance to zero, right? So you've got that. But as far as the appropriations, like EL Gates bed at risk, so if we get $100,000 and we spend $200,000 in expenses to do that, you don't want any sort of transfers from the general fund to kind of cover that, showing, well, we had to supplement it with the general fund, income. You just show it as a negative on your statement of by restriction?
No, you do transfer. You absolutely transfer. What I'm saying is schools are showing that they're not deficit spending when they really are, and there's funding implications to that. So in your example, you really did spend $200,000 in I don't remember if you said at risk or ELL. Let's just say ELL. Yeah, and you only got $100,000, but you really spent $200,000. But in your books, because you only got 100, you're treating it as a grant. You're only coding $100,000 of expenditures to zero out. That is something very common we're seeing when you're actually spending 200,000. And that hurts future funding requests because those transfers are captured on the 387, 388A report, and it shows your deficit spending in those special programs that we don't get enough funding to service IEPs, ELL, at risk, et cetera. So make sure you code all that because, especially in special education, as many of you have learned, local SPED specifically, that local SPED funding tier that's within the PCFP, not to be confused with state SPED, it is directly tied to your deficit spending in special education. So to your example, Michelle, schools that had $100,000 in state special education money and they only coded $100,000 of special education expenditures, even though they spent $200,000 or $300,000, because they're not showing that deficit and a fund transfer over, they got $0 in local SPED for the biennium, even though they actually were deficit spending. So that's the point I want to make. And please, if you guys have clarifying questions like Michelle did, now's the time to ask them. But I can't drive that point home enough because we also need to make the case as charters. And I know you've all heard this and you've heard me say it before, that there's a narrative that we aren't serving the same populations of students, right? That we have way less special education, way less high need students, way less blah, blah, blah. And that is not true. But when you go to point to the data and you say, well, show me their expenditure reports, and they show it zeroed out that they weren't deficit spending, that they don't even have to transfer money out of their general fund, it looks like from an operational and a resource standpoint that we're either not servicing the same population of students, or we're not servicing them in the same ways and spending the same amount of resources as districts to meet the needs of those students. So that is it's a hugely important point. Michael, go ahead. Some other questions in the chat?
Yeah, so we got a question from Monica that's very similar to what Michelle's, and you kind of answered it. Does spending more in ELL, GATE, and at-risk trigger more funds for the school?
So not necessarily, and those are based on count day, at-risk, GATE, ELL, and you all know the at-risk is very confusing. It's rooted in the Infinite Campus algorithm that establishes a grad score, et cetera. I do want to let you guys know when we get to the end of this, we are planning a PCFP mechanics training where I will completely walk through the PCFP waterfall, the implications of all that. So I won't dive too deep into it, but GATE, at-risk, ELL are rooted in the October 1 count from the prior year, and it's a per pupil amount, right? State SPED is also rooted. State SPED is outside of the PCFP, what we call the waterfall. It is rooted in the October 1 count from the prior year. However, the SPCSA is treated as the LEA when it comes to special education. They get one pot of money. So as our total portfolio of schools, as the IEP count grows, that fixed pot of money for the biennium gets distributed on a per pupil basis across the full SPCSA portfolio of schools, the total IEP count. So if IEPs go up from the first year to the second year of the biennium, you can sometimes see that per pupil amount go down some because, again, there's only one pot of money there, but it does get distributed to you on a per pupil count, even at the state SPED. Local SPED is a totally different thing. It's not actually special education funding. It's really a reimbursement and a recognition of the transfers you have made out of your general fund from just general per pupil dollars over to special education to balance that fund out because you have spent more than the state actually gives you because we're so far underfunded. And that's the one that really has funding implications, but the other ones do too, right? Because we build a budget, the narrative goes to the legislature. We need to be showing that we need more money. We need more money, not only in base funding, but ELL, at-risk, et cetera. The only way we're going to do that is to show how much you guys are deficit spending. Sorry, that was a bit of a soapbox, but.
Yep. And we have another question from May. Is the audit report still required to include government-wide reporting?
Yes, great question. That is rooted in that GASB 34 in that 1999 issuance that GASB came out with, GASB 34. Yes, auditors are required to meet those requirements. And so they have to provide both sets of financials in those audits. So I'll just tell you for like our school, Oasis Academy, we've kind of built our books based on what school districts and stuff do. Only time I ever dealt with government-wide financials was the year-end audit. I had a separate depreciation schedule, a whole separate calculation for PERS liabilities, et cetera, an asset schedule, long-term debt, et cetera. All of that was on separate schedules. We would present the auditor with our books on a fund basis, along with those other schedules, and the auditor would put together the final financial statements after they audited all the various transactions, and that would produce the year-end financials, none of which we actually made journal entries into our books in order to close out the year. They were all done outside of that and contained in the audit in the government-wide set of financials in the audit that our board would then see, post a link on your website, and also goes to SPCSA and NDE. Michael, anything else in the chat?
No, nothing else in the chat, but Michelle did raise her hand again.
Go ahead, Michelle.
Sorry if I have too many questions, but I just want to make sure I clarify. One of the things, and this goes a little bit into accounting / the budget template, right? And the whole Gatsby 86 and the lease and the ROU and the rent. It's feels very on a, fund accounting basis. Your cash out is your rent, your lease, right? You pay $50,000 a month to your landlord, your lease. But we know with the ROU Gatsby 86 that you've got this depreciation schedule, right? That's doesn't align with how much you're paying out. So when recording it, I don't know how to phrase it. So on the budget template, we were, I don't know how to explain it. I guess I've been putting the short-term lease of a school, right, in the 440 in the 441, which is like, object code, which has got your on the NDE chart of accounts. When you read it, it talks about the description about it being like a lease. Whereas the feedback I'm getting on the template, maybe this isn't the right place, but it still feels like accounting because how am I recording it? Is that it should not go to the 441. It's a 5,000 function, but it's not being clarified to me, like kind of, I just don't know how that kind of, to me, it's a short term, 1 year of lease payments is a short term, right? Lease, and there's no principal and interest to it like the ROU. It's just rent. Am I really,
No,
I don't know if I'm answering
no,
the question.
actually, no, we've seen that with a lot of schools, and it is a very common misconception. It was, I'll tell you right now, it was for our school as well. I always coded our rent to that 440 function or
Yeah.
440 object code within 2600 function code,
Yeah.
right? Which is operations and maintenance or whatever. That's where it used to go. But NDE does recognize this is the one area there's a little bit of crossover with government wide with the GASB regulations, in that once GASB made that change to say, hey, leases over 12 months, multi-year leases are really capital leases where you are now required to recognize it on your books as both a liability and an asset. It's really the same with equipment, right? If you were to lease a bus for a 5-year lease or something, same sort of thing. But how that's so it's treated as GASB then as a balance sheet item, as well as, so it's debt also, right? It's an asset, but there's also a liability component to it that's debt. So NDE has recognized that in a chart of accounts, said, okay, capital leases are now debt, but just the payment, not necessarily how you amortize it on that GASB schedule to even it out over the useful life of the facility or the lease terms. If it's a 20-year lease, right, that those GASB adjustments amortize that over that period. That's not what you're actually recording. So on your schedule C1 in the budget template, you would list that lease. And if it's not broken out in principal and interest, you would just list it all as, let's just say, principal payment. And you would just list your 12 months of payments for that lease on schedule C1. And then any other long-term debts that you have, whether broken out principal, interest or not. And the total of those go on schedule 14A, line item 5,000, which is just total debt service, right? It's all the debt you're paying, long-term debt you're paying, which includes principal and interest, whatever. Because again, it's the checks you're writing out. But that is the one area where it moved from a purchase service over to really debt, based on that GASB change, GASB 87.
What object code when you're what object code would you use, right? Like just accounting wise, if you're doing 100, 000, 100, 5,000, what? I mean, like, do you still use 441 as, your,
No, go down
no.
to the 800 and 900s. I would
Yeah.
pull it up on my screen, but my screen's taken up with all this stuff.
That's
So
okay, I have it
go
here.
go to that tab, the object codes, go all the way down, and you'll see the object codes in the 800s for principal and interest and capital leases. You'll see it down there, and that's where you code it. So it would really be like a 000 program code, a 5,000 function code, and a 800 something object code. If it's bond or like a loan, there's two different object codes for principal and interest that you record.
Okay, and so then you're not accounting, one last thing just to clarify, because I think this is the best place to do that. So obviously that clarifies that. So your your expenses hitting it, but your RO depreciation and interest is not hitting your statement about your P&L statement activities. In depreciation, 791s, account codes are 892s, interest. You are not it should not be hitting it like a yearly, monthly entry to offset
No,
it.
you should. No, you should. If you know what your interest is, again, if you don't, if you just have a lease and it's like, here's my lease, and you don't have it, I would just code it too. I think there's a code in there for leases, but no, if you have a loan, a long-term agreement that's broken out between principal and interest, use those two different codes. But the combined amount will form your total debt payment that you'll code. It all goes to 5,000 function code. So your expenditure in fund statements is the total of those payments. It's the total of your principal and interest that you're writing a check for in that year. That's what hits your fund financials as an expenditure. It's the total debt service that you had to write checks for. Depreciation, I know there's an object code in there. We took it out of the budget form. School district will use depreciation sometimes in those enterprise funds where they're holding other assets and things. They will treat those more like on a government-wide basis. And I've spoke to CFOs about it. I'm like, where would you even use depreciation? They're like, oh, we don't use it in our general fund, special funds like SPED and so forth, so on and so forth. They're like, we only use that depreciation and amortization in those very special funds like those proprietary enterprise funds, et cetera. So there are some codes there for that, but you'll notice we took that out. So you do not capture depreciation in your fund budgets, reports, et cetera.
And in accounting as well. Like it's just your ROU amount is not hitting any of your, like I said, you're not doing any entries, through the year to whatever. It's just something.
Not if your books are kept on a fund basis. If you're keeping your books right now on a government-wide basis where you do, and I know a lot of you are, where you're capturing depreciation maybe on a monthly basis, or definitely your interest payments, that's all different. Of course, I'm definitely not telling you to change mid-year or midstream by any means. But if you are doing your books on a fund basis, no, unless you have some type of special fund, again, where that would make sense, you are not recording depreciation. That is a year-end audit thing under the government-wide financials under that GASB 34 ruling or implementation. Nandini.
So I want to follow up on Michelle's and recording of the debt and the capital. So if a school is able to produce an annual rental agreement, so this is revisited every year, they have a annual increase COLA that's put on their rental or their monthly rental amount. And in the audit, it's put as a rental expense. It's not put as a debt or capital expenditure. Would we then still be allowed to keep it in 440? Or because when we're going into the capital and debt tab, it clearly says in there if the agreement is 12 months or greater. If it's less than 12 months, we can keep it in 440, right?
Correct. And we do have a handful of schools that are like on a year-to-year lease where it renews annually. Then that would go in that 440, just the total of your lease payments under 2600 function code. Yep, absolutely. That would go there.
Okay.
And things like leases for other equipment, right? If it's some sort of year-to-year lease, then I would definitely just keep it there. Correct. Okay, we do have a couple more slides to get through. And then these are great questions. I'll open it up to more questions and I'll go revisit any other slides. Mike, is there anything else in the chat that I need to address right now?
No, we haven't got anything else in the chat yet.
Okay. So real quick, this was just kind of a slide. It kind of mimics that Schedule 1 on your budget forms. And this is just a really brief kind of some of the common mistakes we're seeing. And I've already outlined these, but we've seen, so you got your governmental funds on the left, what fund it is or what we're talking about, the revenue expenditures, and then I just made a brief note. So we had seen things like expenditures exceed revenue in general fund. doesn't really make any sense unless you are pulling out of reserves to, let's say, fund a capital project. Maybe you have a bunch of money in reserves and you're going to deficit spend in a year to, add on to a building, remodel, whatever. That's the scenario. It could make sense. We're not always seeing that, though. Next, you'll see this ELL line where they match. This goes back to an earlier conversation we have where it's like, it's not a grant, right? So this is a big red flag for me. When I see ELL, at-risk, special education, GATE, when I see revenue and expenditures matches exactly, that tells me that you're treating it as a grant. And I mean, think about it. There's no way you're going to spend, there's going to be a coincidence that you spend dollar for dollar. It just so happens to meet your dollar for dollar with your revenue. So this goes back to that appropriation versus grant treatment of these funds. We've seen things like where you're recording revenue with no expenditures in a fund. So it looks like, so just on a surface, if you're looking at this like from the board level or from the public's perspective, this tells me you're getting at-risk money, but you're not running any at-risk programs. That's the implication of this, right? Special education. We've seen this, and these aren't specific to these funds. These are just examples. But we've also seen examples where you're getting more revenue than expenditures. So again, this looks like, hey, you're getting $1 million in special education funding, but you're only spending $500 to service those IEPs. We know that doesn't make any sense. In general, when you look at 387s, even of districts, and you look at what's coming back in local SPED, it's generally in that 2 to 3 times state SPED range is what school districts and charter schools are spending to service IEPs. So again, if you got, using this example, $1 million in state SPED revenue is just those quarterly revenue payments you get from the state. It does not include local SPED, and I'll talk about that in a second. But I would expect to see this be more like 2 to 3 million in expenditures, in state special education expenditures there. Federal revenue, 280. These are generally grants. So sometimes if I don't see these match, I'm going to ask for an explanation, right? Like, why are you spending more in those federal funds than you're actually getting? I don't know fully that that's always the case. There probably are cases where you would transfer money over to the federal fund if you're supplementing maybe, I'm just trying to think of what maybe a Title I program or something like that. But in general, you match those dollars up in accordance with the funding requirements in those. So might not always be wrong, but usually a red flag that we look at, we flag it. I have seen where schools have just listed another fund, not even a number or anything. They've just listed an other fund with revenue expenditures. Again, all your funds should have a number. They should fall within the NDE chart of accounts, and it needs to be a fund that's authorized by your board. This is usually what I've seen in budgets is schools using their local funds and setting it aside as a separate fund. So all those 1,000 revenues on Schedule B, I have seen schools set that aside as if it's a separate fund. Those are almost always just general fund revenues in that 1,000 revenue code. Things like interest expense, student fees for co-curriculars, private donations, et cetera. That's all generally contained in your general fund. You won't be listing some other fund. So just something we've seen a handful of times. Fund transfers being zero. I can't even really think of a case where this would actually happen. This would imply that you are matching expenditures to revenues in all of your funds, and you don't need to transfer any funds. We've already kind of gone over that, where that's generally not the case. You're going to spend more in ELL generally, especially special education. You're probably spending more. Food service I've seen very common, which is Fund 290 that I'm not listing here. If your board has decided to set food service aside as 290, which is totally fine, you may be spending more in food service than you're getting back from the USDA or something. So that's common to have a transfer there as well. So that is another big thing we've seen on budgets, as well as the 387, 388A report. Missing fund balances, missing or not matching. So in this budget template that you guys just did, tentative budget, you have fiscal year 25, which was the close of last year. You have the current year, fiscal year 26, and then your tentative for fiscal year 27, right? There's 3 years. Well, first of all, 25 should match your audit. You've had your audit now for months. Your opening fund balance, your revenue expenditures, and your ending fund balance should tie out to your audit. And then that ending fund balance for FY25 should become your current year's opening fund balance. We look at that, like, does it flow? Obviously, it's your opening fund balance for fiscal year 26 because it is your audited balance. It's legit. And then going through your fiscal year 26, your current year, having an ending fund balance, and that ending fund balance becoming your tentative budget for FY27, becoming its opening fund balance. So we look to see if those fund balances are flowing. And generally they should flow. So, but we have seen it, not only are they not flowing, but just missing completely. And last thing, total resources should always equal total applications. And so what that means, your total resources is the combination of your opening fund balance and all your inflows, whether it's debt, whether it's local funds, state funds, federal funds, grants, et cetera. All that inflow combined with your opening fund balance makes up your total pie of resources available to run your school, available for education, whether it's capital purchases, funding teachers, payroll, all the things, right? And all the various programs. That makes up your combined resources. And then your applications of those resources are all the outflows. Okay, everything you're writing checks for, from debt, capital, payroll, all those sorts of things. And then anything left over is your ending fund balance. So your total outflows plus your ending fund balance becomes your total applications. Those two should match. It's kind of like in accounting, assets equals liabilities plus equity, right? The two sides of the equation match. That's essentially the same thing. Okay,
Dusty,
last slide.
We had some questions on that slide in the chat.
Okay, let me finish this slide real quick because this is the last one in case it answers any questions, and then we're going to be solely on to questions if that's okay. So this is just a sample. This is not a workbook you guys see, but I tried to make kind of a practical visual with a few funds showing transfers and various things that balance, right? That would be typical. Okay, so this isn't based on any specific school or anything like that. This is just kind of resources, applications with ending fund balance, and it's separated by funds. So this particular example has 4 different funds: general fund, state sped, 280 federal, and 290 food service, and then a combined of those 4. You'll see the inflows, okay, up here, combined with the opening fund balance, which is this 8,000 line item, makes up total resources. And then going out, this is really by program and function I did this by. So 100, 1,000. This isn't all of them. This is just a sample of them. Regular instruction, special education, ELL support services, non-instructional services like food service, debt service, and then fund transfers out. So what my goal here was to show was how the revenue would come into each of these funds, the fund transfer, which is in green, in order to balance out the deficit. So if you just look at state special education, this example has $100,000 coming in. It's a state resource, right? So it comes in at the 3,000 level. They're spending, if you go down on special education, $300,000. That creates a $200,000 deficit, right? Well, in order to zero this fund out at the bottom, have an ending fund balance of 0, they have to transfer in $200,000 to zero that out. Okay, that's in the green up here. That's part of the resources available in that fund. Federal funds. This one is just grants. It balances 50,000 coming in federal, 50,000 going out. This particular example, I used Part B. It's special education, so it's in the same program, the same special education line down here, but it's separated by fund. Okay, so 50,000 resources, 50,000 coded of special education expenditures coded to that grant to Part B, zeros out at the bottom, no fund balance, right? Last one, food service, 250,000 of USDA dollars coming in. Those are federal. The school spent 300, creating a deficit of 50. There's a fund transfer in of 50 to zero out the fund down here at the bottom. Okay. So when you look at this, those transfers in have to come from somewhere, right? They generally only come from one place. That's the general fund. So this school needed a combined $250,000 of transfers in to balance out these other funds. It's one line item coming out of the general fund down here. It's an expenditure to the general fund. The general fund writes a check over to special education for 200,000, writes a check over to 290 food service for 50 to help those become whole, essentially. Because remember, these are separate, totally separate entities within your school. Now, last, you had a combined opening fund balance of 500,000. The ending fund balance is really what's left over after all those applications. It's 750, and you can see in blue, total resources of 7.15 million equals total applications of 7.15 million. So this is just a simple kind of balancing exercise that shows you how they might come in, a transfer needed to balance it out, and how the total resources meet total applications. Now, one other thing, again, this is just a clean example of what would be considered correct on fund accounting basis. What you shouldn't see, and what's actually restricted that we've seen on some 387, 388 reports, are transfers out of the special education funds, like special education, state sped, 206 ELL, 208 at risk, where you're transferring money from those funds to another. You are legally bound that you can't use those resources for anything else. So making sure you understand the legality of those resources. If you get ELL dollars, you can't use them for anything else. Even if you did get overfunded in ELL and have an excess of funds, you would have to hold it as a fund balance. You would not be able to transfer it back to general fund or transfer it over to use an at risk. You're not actually allowed to do that. So some of those funds, and the federal funds the same way, you're restricted on where those dollars have to stay within a fund. But 99% of the time, these special funds, whether it's state sped, federal, especially at-risk ELL, no one has a fund balance, because again, everybody's transferring into those funds just to make them whole, because we're so far underfunded that it's taking more money to service those kids in those programs or in those funds than we get from the state, right? So those should almost always be, with the exception of a rare few cases, those should almost always be zeroed out. And those transfers, that $200,000 transfer in this example to state sped, is what would become hypothetically your ELL reimbursement, or not ELL, excuse me, your local sped reimbursement in the next biennium potentially. And that's a different that's a different topic of the mechanics of the PCFP. One last thing, and then I'll take questions. In special education specifically, we have seen in this line item for revenue on your Schedule 1s in your budget, schools combining that local sped money with state sped money. You can't do that. It's not a revenue stream. So your revenue that you show in 250 special education coming from the state is only those quarterly state special education payments you get. It is not the local sped that you see as part of your monthly payments. That local sped money is part of the general fund. It's just a carve out recognition of the prior general fund dollars you transferred over to special education, which I'm showing right here, which in this case would be this 200,000. It is not special education funding. It is no way, shape, or form there to fund special education. It is basically just a reimbursement, and it actually comes out of the PCFP base funding in order to give it back to you in the form of that reimbursement. So I hope that's kind of clear, but I am going to cover that in a PCFP training later. Okay. That was a lot. We got about 15 minutes to take questions, more questions, so fire away.
So questions in the chat, I'm going to take them a little bit out of order because Ben has a question that I think is more for me to answer than for you, where, since it is performance framework related. If we should be accounting on the fund level, why does the quarterly financial template require revenue and expenses on fund level and assets liability on full accrual level? Should we still be tracking depreciation, fixed assets, pension liability on monthly basis too? Still seems a bit like 1 foot in and 1 foot out kind of deal. Ben, you'll have to accept our apologies on that. It is exactly a 1 foot in, 1 foot out kind of deal. The frameworks are in transition over to that full fund basis, with the exception of assets and liabilities, because we do need the long-term numbers also. Next year, those balance sheet items on full accrual are going away on the quarterly report and will only be reported annually on the audit. The current template is kind of a go-between the old system and the new. So kind of apologies. We do still have for that monthly full accrual through the rest of the year, but starting next year, it's going away and it's going to be fund basis only on the quarterlies. So, so going back to the questions for Dusty, Robert asked to please be specific on how to handle Fund 280 expenditures title money received. As an example, Fund 280 issue, we hired an employee with $100,000 of Title 1A money, but the employee makes $120,000. Where does the $20,000 go? Is it in general fund under regular programs?
In general, I would say yes. So part of that employee would be split between Title I and general fund dollars. Let me. I will write that question down, though, because I have seen where districts have transferred. I shouldn't say districts. Other schools have transferred money. They code it all into that federal fund and then transfer money over into there. I generally think that's supposed to zero out and you only allocate what you get to that money. So in your example, $100,000 would be all you allocate to it. And then the rest gets coded to the general fund. But I will verify that. So thank you for that question. I do want to address one quick thing, Mike, based on what Ben's question was in that. I don't want to give the interpretation that we don't care about the government-wide financials and the long-term financial health. That is a piece that looking at those audits, it will stay part of the financial performance framework because we know already from prior experience, the number one reason charter schools fail generally is financial reasons, right? And the implications of capital leases, building purchases, all those things that are required as part of your charters or sometimes charter amendments are rooted in those financials, right? We see that stuff in those government wide, but that will be mostly on a annual basis, but there are components of that will stay part of that financial performance framework just so those things can be monitored. And that's what the SPCS board wants to see. Okay, next question, Mike.
And thank you for adding that clarification, Dusty, that it's not that we're not monitoring it anymore. It's just being monitored on an annual instead of quarterly basis after this year. So the next question is from Nandini. Can you share a resource that outlines that PCFP weighted funding is not a quote unquote grant and should not be balanced at the end of the school year? Makes complete sense to us as financial leads, but our school boards and leadership are wanting to see balanced restricted reports since the funds are earmarked with a subgroup.
So Nandini, I would point you to the funding bills that passed. So I think AB 398 and I don't know. I can't think off the top of my head the funding bill, but you'll see those appropriations earmarked out, ELL, at risk, et cetera. They are not spelled out in those bills as grants. They're restricted funds. They are restricted in purpose, but they are appropriations, and you'll see it in the bill where they're titled. I don't think it's spelled out that says you can't spend more in ELL than you're getting, right? Because some people get federal dollars to help service ELL or at risk, right, et cetera. So that doesn't really make sense either. But if you look at those funding bills, those are the appropriations, and you can really point to any district financial and look and see those transfers over to ELL and especially state special education.
And then Timothy had his hand raised.
Yeah, my question is kind of complicated, so it was going to be a lot to type out. So in accounting on a funded basis, when present, like for example, if you have a school and for some reason or other you're unable to spend all of your ELL money, and you have some sort of ELL fund revenue left over, when preparing the NRS report, we were given the instruction that you cannot have a fund balance at the end of the year. However, you're saying you should have one based on doing the actual fund accounting. How do you reconcile that issue?
So, I mean, if you're the CFO or the back office service provider, number one, the reason NDE is saying that is because that's like a unicorn, basically, in that you got that ELL money, that revenue based on an ELL count and that count day. So a couple of things would have been wrong. Either your count was wrong and you got overfunded, or there's expenditures that have been left and unidentified somewhere in the general fund, and NDE is telling you go find those expenditures and record it and at least zero it out. But you cannot. But if you're literally in that example, if you're in that scenario where you did get overfunded, that's what that really means. It means you were overfunded. You would show that balance, and you would tell NDE, we didn't use all the money. And they will say, okay, well then I don't know the implications on that, whether you have to return that money or what. But that basically, every time we've seen that happen, schools, back office service providers and stuff, finance teams have gone to the school leaders and be like, wait a minute, we're showing that we didn't spend this all. Is that possible? And they're generally, well, every time I've seen it, the answer has been no. And they end up coding more expenses over to it. Okay. But that would be a one-off. So you do have to absolutely show it at the bottom in that scenario.
Okay. That's why I use the example historically, because typically we've used all of the funding, but when it came to presenting the report, like I said, they said every fund at the bottom had to be zeroed as part of submitting the report, and it just did not make it. Like we underrepresented our SPED funding for years because the instructions were unclear. So I just wanted to follow up in case something happened in the other direction.
Well, and that actually, and let me be clear on that, because when they say zero at the bottom, they're usually talking about the worksheet balance. So if that worksheet balance has a number in it and it's not zero, they're going to flag it. But how, in your example, how you would make sure that worksheet balance is zero is you would put an ending fund balance of your leftover money in that ending fund balance line item. And so that would make up the remainder of your applications. And that worksheet balance at the very bottom of the 387, 388A report is what says, do your total resources match total application? So as I mentioned earlier, total resources is your opening fund balance plus all the inflows, and your total applications is all your outflows, expenditures, plus whatever's left over, whatever reserve you didn't spend. So those two together, your expenditures plus the ending fund balance, would zero out that worksheet at the bottom. So you would make sure you put in a positive ending fund balance in your example, but they will flag that. And there's a chance, I don't know for sure, if you would have to return that money.
Okay. Thanks.
And we've had a question come in from Loretta. Did you say that the SPED local PCFP funds are not dedicated to spend for SPED?
They are not. They're general fund dollars. However, in the 387 report, you transfer that. Remember, there's that separate box that NDE created up above in the 1000 section in state sped, where you actually transfer local sped over to your state sped. It's actually part of your general fund transfer to state sped in order to balance out your deficit spending. And the 387 report specifically, now, it never used to be this way, but you end up with two transfer cells in there. So in this example that I have up on the screen, if you've got 100,000 in state sped, and let's just say, and you spent 300, so there's a $200,000 transfer. In this example, whatever local sped, let's just say local sped was 50,000, it would be contained in that $200,000 transfer. In the 388 report, you would transfer that 50,000 local sped in one box and the balance of the 150,000 down in the general fund transfers line. But the two combined, like in your budget, make up your general fund transfer over to state sped. So it's generally just an in and an out. Again, it's only there to recognize what was transferred before, but you do transfer it over to state sped. It's just part of that general fund transfer. I hope that's not too confusing. I know it can be.
And we got another question from Ben in the chat. I've brought up the full accrual versus fund accounting conversation to our auditors previously, and they obviously prefer us to be accounting on full accrual because it is less for them to do come audit time. My preference would be to be on the fund side with how we need to report quarterly, annually, etc. with the 387, 388A. Is it worth having a notice go out to the auditors and charters that we should be accounting on the fund level on a monthly basis?
We're talking about that internally. What I will say is I don't believe the SPCSA is going to make any rash decisions. Just recognizing where you guys are all at. I understand the lift it can be, et cetera, whether it's changing over accounting systems or books, et cetera. However, in your specific example, your auditor's opinion doesn't really matter. What matters is the slide I have up. And I would point them to this slide and say, it's rooted in all these NACs and NRSs, every report, your budget report, your 387, 388 annual reports, the F33, like all of that is done on a fund basis. It's all rooted in GASB and local government accounting and stuff. So they should know that in general, local governments keep their books on a fund basis, and the audit is when the GASB 34 government-wide financials are presented.
And Michelle has her hand raised.
I would just like to say that was a great question by Ben, and I appreciate the answer to that. I have one last question. You had mentioned previously about pulling funds from the ending fund balance, right? Going into that. I have a school that at the end of the previous year restricted some funds to go toward a project. They wanted to use some funds out of the ending fund balance. They didn't have the funds. Let me start with that, to do a big project at their school. So, but they had a positive ending fund balance. So they restricted some funds for it to be used in the next year. So now we're in this year and they've spent, let's just say $200,000, right? The restricted amount. How do you reflect that in recording it as far as like not coming out of their current budget? Because their current budget doesn't support it, right? It doesn't support spending 200,000 on it, but pulling from the ending fund balance. So is there some sort of entry that pulls from the ending fund balance and brings it in as revenue to cover it, or you just show negative? What do you do?
No, so there's nothing that requires you to run a balanced budget, meaning matching, not spending in the current year more than what your revenues are, right? So your inflows and outflows in any given year, there's nothing that requires you that says you can't deficit spend in a year if you have the reserves. So this example I have up right now, let's just say that the opening fund balance was $1 million and there was a capital expenditure of 250,000 and the ending fund balance was 750. Obviously, in that example, they deficit spent in that year, but they still have a positive ending fund balance. So I'm going to go up here real quick. NAC 354, 650, and NRS 354. This is centered around districts, but as you guys all know, what's required of a district generally gets required of charter schools as well, whether explicitly or implicitly. But what is important is that you have a positive ending fund balance. Charter schools in general are saving money because we don't get debt service tax dollars, right? We don't get designated tax dollars to service debt, service capital projects, et cetera, like the majority of districts. So ultimately, you end up saving money over time in order to do a capital project. Well, in that year that you actually write checks for the capital project, that will go into your budget as a capital expenditure. So object code 700 is capital expenditures, right? So if you buy a building, it's function code 4500, object code 700 and something. And that will, if it's $5 million coming out of your reserves, it becomes an expenditure in your budget. So if your board decides to do it mid-year and pull the trigger, you need to do an amended budget that shows that expenditure in that code. Okay. And then it'll ultimately get reflected in your ending fund balance because it'll reduce your ending fund balance. So ultimately you're using your reserves, but you're putting it in the code it goes to so they can say, okay, this increases the authorization in the general fund in that example under program 000 function code 4500, object code 700 for our school leaders to go do this renovation or buy this building or whatever. But it does have to be in your budget in order for you to write the check.
Okay, great. So yeah, we have a school that bought a $4 million building out of cash, right? They had built it up. So that $4 million is not just an asset on the balance sheet, but it's also an expense where they wrote a check out in the whatever the code is. I don't, for property.
Absolutely. That would have been a $4 million expense in your budget. So that's tab BB, I don't know, 12 or 13 in your budget. There would be a $4 million line item in that cell for that. So we're at our 90-minute mark. Really appreciate the questions. I'm happy to stay on for those of you, but I do want you to think about, we do have a couple other trainings that we are going to do, but given the questions that I've seen, one of the things I've noted is additional trainings and what you would like to see. And I'm all ears. So a PCFP mechanics training, I think that's vitally important. There's a lot of misconception around how local SPED works, exactly how the different funding tiers work, et cetera. So we are going to do that training. But are you guys interested? Would you find it useful? Because these can also be collaborations, right? I don't have to be the only one answering questions. I would love for other people to chime in and say, this is how we're doing it. Hey, this is how we're doing it. CFOs for the districts get together on a quarterly basis with NDE. They're going to start some additional work where they get together and collaborate. We're happy to host that, where we discuss things like coding best practices, right? How do you implement the chart of accounts and where should we code things? Hey guys, how are you coding? How are you splitting positions? How are you coding split positions? How are you coding your principals if they if they have dual roles? All these different types of questions. Hey, we're thinking about taking on debt, et cetera. Happy to do some additional trainings around forecasting, for example, budgeting best practices, including forecasting, how best to forecast out multiple years so you can start presenting that to your boards as a best practice, et cetera. So all ears. I am seeing a lot of stuff to additional training around coding. So go ahead and drop that in the comments if you have a minute, things you would like to see. I do know that forecasting, if you guys have watched the news at all, has really gotten charter schools into trouble, lack of forecasting, I will say, as well as districts. I'm sure you've seen on the news districts that have gotten themselves in trouble, that are going under state monitoring and stuff because of lack of forecasting, right? Forecasting out enrollment, revenues, planning out accordingly. That's hugely important. So we're happy to do those. I'm seeing a lot of positive stuff around just coding best practices, accounting best practices, so we can do a training around that as well. PCFP training, coding training, specific report training, absolutely. We will continue to do training around 387, 388A. Happy to do a year-end prep training around getting ready for the audit and the 387, 388A. Or if you guys have questions around, hey, we've got these questions before, we're thinking about transitioning our books over, from a government-wide, more of a private basis to fund accounting. We're happy to be a sounding board. If nothing else, I'm great as a sounding board. I'll throw 100 different ideas at you until we find something that sticks. We're happy to help with that kind of stuff. Kerrigan, I saw your comment about just what is program 000. That would fall under the chart of accounts, right? So everything in the NDE chart of accounts is on a fund basis, right? All those tabs. So please revisit that. You'll see the funds, you'll see the program function, object codes, etc. But we'll set up a training around coding best practices where we'll talk about the chart of accounts. And then if you guys want to do one on budgeting best practices, happy to do that with incorporating forecasting, etc. We can do something like that as well. Okay, any other questions, comments for the good of the order? Anything else?
May asked in the chat if it would be possible to have a sample of chart of accounts for fund accounting.
So, possibly, yeah, like dropped out of a set of books, basically, like, hey, this is how these books were set up. Here's a chart of accounts. Yeah, can do that. Mike, will you note that, please? And we'll do that. Okay, we'll put that as a resource. So where this training gets posted, we'll put a sample chart of accounts as a resource along with this. And then we'll continue that when we do a training on just coding best practices, where we can actually kind of talk about it and implications. I will talk in the PCFP training. That will probably be the next one. I'll talk about funding implications, coding as an implication on funding as well. Well, looks like most people stayed on, so I assume this training was helpful. If not, there is no place to leave ratings or comments, so keep them. you can't
Jill
rate
has
me.
her hand raised.
Go ahead, Jill.
Yeah, just a quick question. I joined a little bit late, but I think one of the slides said something about presenting the budget to the board. Part of the requirement is to do it by fund. Is that right? That we have to present it at the fund level?
Absolutely. I would revisit this slide, Jill. But your board is legally bound to authorize all uses of resources that come in at the fund level. And that binds your school leadership into what they can spend. And that's all rooted in NRS and NAC. It's all rooted in here. And really, your board should be seeing that budget presented on a fund basis, which is what that State Department of Taxation form somewhat is. And then your budget to actuals throughout the year and any amended budgets, because that is their authority level. And that's how they're supposed to authorize the use of resources.
So we have sort of a internal budget that just makes more sense to us in an act of kind of practical use overall. So if I attached the state template that we have, is that considered an appropriate level of fund for them to approve? Like in addition to the one that's easy to read?
Yeah, and okay. I did the same thing. I would have like a summary sheet for my board that summarized like, wages, benefits, any capital purchases, something like that. And like I said earlier, districts will have fancy, the bigger districts have fancy presentations with pie charts and all kinds of stuff, but they always, as part of their board approval package, have those State Department of Taxation forms that show all the expenditures coming, all the inflows and outflows into those fiscal funds that they have authorized the school to open and track money in. That is their NRS required duty as a board. So definitely you want to make sure they see that, and they see their financials, however you present them on a monthly basis. They should be able to measure those against what they approved in the budget.
By fund.
By fund, correct.
By fund. That would all, then I'm going to add that to my request of trainings if there's like samples and templates of things that maybe could work in that way. Thank you.
Got it. Thanks, Phil. Anything else, Mike? You see anything else in the chat?
A lot of people saying thank you and variations on a theme, but no more questions have come in.
Okay. Well, if we don't have any more questions, look for that next training. I know you guys are all trying to get these final budgets in. I will just say, if you have any questions on the various comments that have come back to you, please don't hesitate to reach out. Again, when your board approves that June 8th budget, that really binds your school leadership's expenditure and authorization level going into the next year. So if you're low on expenditures or you're missing a fund or something, according to the letter of the law, you're not allowed to write checks for something that the board hasn't authorized. So do your best to address those comments, and please reach out if you have any questions when you're finalizing your final budgets to go to your boards. We are happy to help. Thanks, everybody. Appreciate it.